Well, we're not done with the market view yet. It's been such a big day. Sachin Shah now joins in from Emkay Investment Managers. Sachin, hi, good morning.
Good morning.
First up, how do you play the market now? Because quite clearly, just when it looks like the market is getting a bit tired or is getting fatigued, it keeps getting new triggers. The latest example being today's rate cut. What's your advice to traders and investors for this market now?
Well, clearly today was a big surprise, and of course, what it also means is probably that the RBI has given a big thumbs up to the union budget presented by the finance minister just last week. So I think that's a very good thing that we are, as an economy, as a country, we are moving in the right direction. I think the combination of the finance ministry and the RBI, the way it's moving ahead, I think it's very, very strong. So directionally, we are creating a very strong base for the economy. So clearly, from investors' perspective, I think, and obviously, we've seen last 5 years where just before the 2013, the equity markets have done very bad, and because of that, the under ownership in the equities is still very, very high. So from that perspective, I think on the next 3 to 4 years, the good times still are very much in as far as the equity investors is concerned. On the very short term, I tend to agree with you a little bit, because if you see the Q3 results, they were not very encouraging. We have seen some kind of consumption slowdown, or rather subdued demand on as far as consumption is concerned, and even the private capex is not really happening in a hurry. So this rate cut, and with the kind of the allocation that we have seen from the budget on the infrastructure side, all that will happen, and it will take some time before it will start flowing down into numbers. Of course, the macro factors are still too much in favor of the Indian economy, and that's where we are seeing this undertone buoyancy. But yes, there is a possibility that markets may take some bit of breather at this level.
Okay. Sachin, hi. Good to see you in on such an optimistic and euphoric day for the markets. But I wanted to ask you something which is outside the RBI policy. Two stocks which are in news are Spark as well as Sun Pharma. Spark, the research arm of Sun Pharma, and that's on account of an NDA approval that, new drug approval that Spark has received from the US FDA for an anti-epileptic drug. And it's from the Halol facility of Sun Pharma. What did you make of that news? And if you've studied it, any sort of valuation you could ascribe to Spark as well?
Well, Sun Pharma clearly, there was this a bit overhang of the Halol facility with the US FDA concerns. And with this news, it looks clearly, I mean, if you read between the lines, it seems like that they have clearly sorted out their issues with the US FDA, and the Halol facility will be pretty much operational and doing well for the US exports. On the Spark, I think it's very approval based, and the exact opportunity I'm still not very sure of, so I would not like to comment at this point in time.
Okay, Sachin, any stocks that come to your mind in terms of good investment bet at current price?
Sorry, can you please come again?
Any stocks that you would want to recommend at current price which you think still looks good?
I clearly believe that the way the power sector, a lot of reforms are happening, some of the power stocks should actually do very well. And a couple of stocks that we really own in our portfolio and which are our top picks, one of them is Power Grid. We clearly like that business, and with the interest rate cut, I think there is another big benefit because it's a fixed ROCE business, and we've always seen that, a fixed ROE business rather. So we've seen that whenever the interest rates actually drop, the utilities with fixed ROEs actually do very well. And in Power Grid, we are actually also seeing that there should be a 15-20% earnings growth for the next 2-3 years. So that is one stock which clearly still looks very good.
Are you confident on further gains, say, for the housing finance companies? For example, if you look at Diwan Housing, that stock is up 37% YTD. It's trading at 542 rupees. Your thoughts?
Housing finance as a sector is going to be one of the biggest beneficiaries with this rate cut. This is the second rate cut that we've seen in such a short span of time. And, because they are wholesale borrowers, clearly, their cost of funding is going to be lower and the spreads would be a little better. Other thing which I heard Mr. Deepak Parekh and Mr. K.K. Mistry mentioning that, in spite of all the banks being in the housing finance lending also, but they are not reducing the rates because they have other issues to manage. So that's how their spreads are getting actually managed pretty well. Thirdly, I think with the interest rates coming down, there is also going to be demand growth. So there is going to be top line growth as well as margin expansion as far as housing finance sector is concerned. So I think they are one of the biggest beneficiaries of these early rate cuts.
Okay, fair enough. Any disclosures?
Yeah, so we do own HDFC, LIC Housing Finance and Power Grid.
All right, Sachin, thanks very much for joining in and talking to us.